Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you, and this is coming straight from my brand new trading course called the AI Stock Trading System. I've literally pulled this lesson straight out of the course, and I'm putting it here on the podcast because I really believe that this is going to provide you massive value, and that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Okay, I'm Christopher Ewell. I'm your host for the AI Stock Trading System course. And now we are going to be talking about how to... Okay, so I saw this on social media one day. And the quote stuck with me so much, I was like, I got to make an entire lesson on this. It's called How to Cut Your Losses Short and Let Your Winners Run Out of Control. Doesn't that sound like exactly what you've always wanted? I'm going to show you exactly what that means, how that happens, and several examples. In fact, one example that I made in gold, which is really ironic because that's where I lost my account on the second time, but on this time around, I made a lot of money on it, and I'm going to show you exactly how I let my winners run out of control and cut my losses short, which is exactly the opposite of the way that most traders, especially new traders, how they do things, right? They usually cut their winners short and let their losses run out of control. All right, so let's get into it. So the majority of this is going to be done inside of the TrendSpider platform as we do this lesson here. So first up is Apple. Apple doesn't ever go down, does it? Oh, wait, it does. Yeah, all stocks have the ability to go up and the ability to go down. Now, what I'm going to show you here is, like I said, keeping your losses short, letting your winners run out of control. All right, so we're going to do that several times over so you can understand the concept of trend trading. So first trade here, let's say that we're using the 20-day exponential moving average. That's what this line is here. And the way that you do that is you click on the indicators, click the three dots, go to EXP, exponential moving average, click that, get a new one down here. I have several, as you can see. I'm going to trash that because I already have it. And it's going to be in this list here. Now, whenever you need to see your different indicators like that, you just go over to this section here, hit expand indicators, find the one you want. I want the 20-day, which is the black line. And then you click this button, collapse indicators, so it's a little bit cleaner. I had one person tell me, Dan Fitzpatrick, the stock market mentor, he was like, when you look at charts, you really want to keep it as basic and clean as possible, which is why, we use AI to get into stocks, but we're also going to use trend following methods as well. And this makes life a lot easier. You could use just the market trajectory, which is what I use a lot of the time. And let's say Apple is not in the list of stock picks on FinClub. It's still a very valid stock you could trade. So maybe you wait for a green market trajectory and then you see it's over a certain exponential moving average you've backtested. That's a green light. At least that's how I look at it. So with that being said, we go to the chart. We see when it goes over the trend line. And then, like I said, in this case, it's the 20. And we're going to hold it, and we're going to hold it, and we're going to watch it, and then it's going to come back down. All right? Cut your losses short. Let your winners run out of control. In this case, we went from... what was that price? 63 to 67. And that was a 5% gain. That was a pretty good gain right there for when it came back down below the exponential moving average. Now, we're starting here at 67, and we're going to watch it. And it's going to go up and up and up and up and up. And this is the next time that it crosses that exponential moving average. And again, that was a gain of 40%. That's a huge gain. So, cutting our losses short, letting our winners run out of control. All right? Imagine if you had gone short Apple, okay? Letting your losses just stack against you day after day after day. Or you're going to let them run out of control like this. Such a great quote. I wish I knew who said it so I could give them proper credit. All right, let's go. You know what? What I'm going to start doing is I'm going to save these charts for you and give you the links so that you can always reference them no matter if you're inside of TrendSpider or not. So give me 1 second here. I'm going to start dropping the links on my note sheet over here. Okay, let's go to the next one. Alibaba. I just traded this one this week short, and I made money on it. And let me show you why I made money on it. It went below its exponential moving average. I'll tell you what, it wasn't that one I was using. Let's see, is it the 10? Yeah, buddy. Take a look at that. Now, obviously, I had been doing backtesting, and it went below its exponential moving average on this day. Sounds pretty good. Now, it did go over it just slightly on this day, but then as you see down here, it's just continued to go down. And let's say that you went short here and you didn't get out. There's a 4% gain by going short by following this, okay? Truth be told, I did not get out when it went over that line because it was like 5 cents over that line. I wasn't going to do it. And then it went down from there. I've already closed the trade. I'm already out. It was a great trade. So I'm going to copy this one. Copy. I'll put that link down below for you so you can reference it. Next, let's take a look at Alibaba still, but let's trade it from the long side, right? Cut your losers short, let your winners run out of control. This is a great example. All right, check it out. So let's say we went in when it crossed this line here. The winner did really well, and then we got back out here, okay? That was a gain from there to there of 5%. Excellent. Now, I'm going to zoom in just a little bit so we can see this a little better, okay? Same place. And it was going over and back, over and back, over and back, over and back, over and back. And then it finally went down and stayed down for several days. And then it went over and back. And while this one, you may have not made any money from here to here, you also didn't lose much money, right? So from here to here, 54 basis points, less than $1 per share. And on these, right, I can't even draw a line because it was just above and below, above and below, above and below. You're keeping your losses really, really short. Cut your losses short, okay? Then it went down. And then we got long again when it went over, and then it went down again. Whatever, things happen. Let's do that again. We're going long, BABA here. We're going to get out here. Now I know what you're thinking, Chris, what if you got out here? Sometimes you can do that, sometimes you can't. You got to let it run, okay? You got to let the moving averages work. You got to let this strategy play out, okay? But when it reverses, that's the time you take action. Don't try and take action here because you don't know. This could be the start of a 100% move. This could have gone on forever, okay? But what you saw is that it went up and it went back down. And our actual like trade may have lost 50 cents. Keeping our losses short, letting our winners run out of control. Let's do another example. Let's say we got long here when it crested the line, and we got out here when it went below the line. What was our gain? 5%, $11. Over and over and over again. You can do this, right? You can keep your losses small and let your winners continue to run. It can be done. It's really not difficult. So once you start implementing the trend following, letting your losses be short, cutting your losses short, I should say, letting your winners run out of control, that is the key. That's the key. Now, I promised you gold on a trade that I actually did. So I'm going to copy this one so that you can have it as notes. Copy. Paste. All right, now let's go to gold. Go look around my webcam. Okay. I was trading gold on the 20-day exponential moving average, which is what I had back tested to be a good number. This is a good one. You're going to like this. Now, we'll spend more of the time on the next lesson in 2 lessons. I'm looking at my notes over here. In 2 lessons, we're going to be talking about a trader's worst nightmare, watching winners turn into losers. And you're going to, you know what? I'll go ahead and tease it a little bit. So here. The 20-day is the black line. That's the line that I was trading off of. The gray line is the 5-day exponential moving average, which is what I also traded off of. Now, what do you mean, Chris? You told me that you traded on the 20-day. You're totally right. Now, one of my strategies that I learned from Dr. Alexander Elder in the book Trading for a Living, which is right here, is whenever your stock is moving in the way that you want, the trend is going, let's say it takes off like this, right? Now is the time to work with the stock and let it run, but also move your stop point up to where you're keeping at least half your profits. Now, the way that I do that is if I'm trading the 20-day exponential moving average and it starts really taking off, I'm now going to move it up from the 20 up to something closer to the price. Okay? So I'm going to show you on here exactly what my methodology was. So I went long gold probably on that day when it crossed the exponential moving average. June 19th sounds right. And it was doing really well. As you can see, it's going up, it's going up, it's staying well above its exponential moving average. I know that at any point we get to see this go down, I'm out, okay? It could have been here at 165. It could have been here at 164. But all along the way, I'm moving my stops up. Then when it started to turn and, quote, run out of control, I know a lot of people who lost a lot of money in gold on this particular trade because they wanted to be contrarians and they wanted to say, oh, when gold's going up, it has to go back down, which is exactly how I used to trade and how I lost a ton of money. And I'm sorry I keep venting about it, but I cannot stand the fact that that was how I was taught to trade. It's so frustrating. But it's going up. You can see it's going up. It's starting to turn, and my profits are really starting to stack up from 163 now about 172. And I'm thinking, I don't want to let this come back down. We now have a gap from 172 down to 168, a $4 gap per share. I don't want to give up. Now, whenever your gain is more than 1%, you move your stop up to keep at least half of those profits. So I moved it to be on the 5-day exponential moving average because I saw it had a lot of power behind it, and I was just going to let it run and catch those profits before they went away. So on this date here, July 21st, is when I made my move. I've already been in this for a month. A month has gone by, and my stock that I bought has gone up 6%. That's really good. Now I'm like, okay, I don't want to give this up. It's starting to really get these big moves. What can I do? Move your line the trend line you're following up from the 20. And in this case, I picked the 5. I could have picked the 10. I could have picked the 15. But I picked the 5 because I felt that because of the strength of the move, I thought that there was also the chance that it could reverse sharply, like it did. And I don't want that to happen. So it's going up, it's going up, it's going up. It's never at any point crossed the 5-day until here. Literally the day after the peak is when I got out. And I saw a lot of people on Twitter who were like, oh, I bet there's so many gurus claiming that they sold out at the top. You're damn right I did. Because I moved my line up from the 20 to the 5 when it started to really take off. I was not going to let my losses or my winner turn around against me. So I put that onto here. I put my exit onto here. And I was able to keep another 9%. So a total of about 16%. So I feel like mine was about 17% gain from one trade and watching the trend work for me. Okay. This is how you cut your losers short and let your winners run out of control. Now, I'm going to take a screen capture of that for you. And then I'm going to talk about, just this past week, how I kept my losses short on gold. Okay, got that. Now, let's go. I'm going to clear these marks so it doesn't confuse anyone. I'm going to go back to just the 20. Now, this is exactly what I traded. And we're going to talk about this more in the next lesson, about the high probability profit maximizer, which you're going to love. But here, price went over, and then price went under. Price went over, price went under. Price went over, price went under. You know what? Yeah, I got chopped up a little bit, right? Let's say I got in here, got out here, got in here, got out here, got in here, got out here. And let's just make the markings on this. Oh no, I didn't get that one. Remove this one. Yeah, it was a choppy one. And that is probably the only downside to trading along the trend, because sometimes it does just chop. Goes up and down, goes up and down. And it's totally fine, because I'm losing like $3.25, $1.93. And yeah, of course, it doesn't help anything. But after I just caught this monster move... Hang on. Sorry, I'm trying to use emphasis here. There we go. After I caught that monster move, I am not worried about these little tiny moves, because that's just what happens. And any one of these has the potential to make this big move again. So that is how you keep your losses short and let your winners run out of control. It's really a continuation of the lesson before, but I really just want to take a few minutes and just sit on this and let you understand, because this is highly critical. If you get this wrong, you will blow up your account. Fact. It's not an opinion. It is a fact. You get this wrong, you will blow up your account. But if you keep your losses short, then you won't have that issue. So now we're going to go more into the theory and everything that works with this. But I'm going long on stocks on days when FinClub is telling me, hey, it's a green market trajectory day. And I am not going long on days when FinClub is saying it's a red market trajectory day. That's going to be more into the strategy part of what we're talking about. But that, in addition to the things that we're talking about here with the trend lines, we're combining the trends, we're adding in the AI. And next, in the next lesson, we're going to be talking about the high probability profit maximizer. If you can understand this, it will potentially grow your account very, very quickly. But if you don't follow all these rules together, it does have, it's essentially a grenade. You can use it and it will help you a lot. But if you use it incorrectly, it will blow your account up. All right. So this coming up next, high probability profit maximizer. Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning and how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.